All right, welcome back to our crypto trading tutorial for beginners. This is part 4, and today we're jumping into something absolutely huge, trends. So up until now, we've been looking at the tiny building blocks. Today, we're going to zoom out and see the big picture, how all those pieces come together to show us where the market's heading. Let's dive right in.
Okay, so think of it like this. In our last explainer, we really got into individual candlesticks, right? Well, each of those is like a single step on a staircase. But you wouldn't try to figure out where a staircase is going by just staring down at one step, would you? Of course not. You look at the whole staircase. And that's exactly what a trend is. It's the overall direction that entire staircase is moving.
Now, before we get into the different types of trends, we got to cover the number one most important rule in all of trading. I mean, this is especially true if you're just starting out. This idea is basically the foundation for everything else we're going to talk about today.
You've probably heard this one a million times, and for a really good reason. The trend is your friend. Seriously. All this really means is that your job as a trader isn't to fight the market, it's to go with it. Look, trying to perfectly call the very top or the very bottom of a move, that's a game for experts, and even they get it wrong all the time. It's so much easier and usually way more profitable to just, go with the flow.
This slide just nails it. Imagine you're in a river. You could try to fight it swimming upstream against this super strong current, right? You'd get exhausted and probably not get very far. Or you could just turn around, float, and let that current carry you effortlessly downstream. Trading is exactly the same. Trying to fight a strong trend is like trying to swim upstream.
All right, so let's check out our first type of trend. This is the one everybody loves to see, the uptrend. You might also hear it called a bull market. But here's the thing you got to remember. The price rarely, if ever, just shoots straight up in a perfect line. Nope. It's more like a 2 steps forward, 1 step back kind of dance as it climbs that staircase.
So the first part of this little dance is what we call higher highs. And it's super simple. Every time the price hits a new peak, that peak is higher than the last one. Going back to our staircase, this is the market taking a brand new step up. This is that 2 steps forward part of the whole move.
But here's the really important part. After it makes that new high, the price usually pulls back just a little bit. That's our 1 step back. Now, in a healthy, strong uptrend, this little dip, or low, is going to stop at a price that's still higher than the previous dip. We call these higher lows, and they're a huge sign that buyers are still confident and they're willing to jump in at higher and higher prices. So how do you actually trade this thing? Well, the basic strategy is beautifully simple. First, you spot that clear pattern of higher highs and higher lows. Once you're pretty sure you're in an uptrend, you don't chase the price when it's way up at the top. No. Instead, you wait for those little 1 step back pullbacks and you look for a chance to buy on the higher lows. You're basically buying the dip to ride that current upward.
Of course, what goes up doesn't always stay up. Markets don't just go in one direction. And that brings us to the complete opposite scenario, the downtrend, also called a bear market. So if an uptrend is like climbing the stairs, a downtrend is, well, it's like tumbling right down them. The structure is a perfect mirror image of what we just learned.
Okay, in a downtrend, after the price takes a tumble, it'll often try to rally back up a bit. But in a bearish market, these bounces, they're weak. Each peak or high can't even make it back to where the last peak was. We call these lower highs, and they're a dead giveaway that sellers are in charge, pushing the price down from lower and lower points.
And then, right after each of those weak little bounces, the price falls again. And this time, it drops to a new low that's even deeper than the last one. This creates the second part of the pattern, lower lows. This constant cycle of making new, deeper lows is the classic signature of a downtrend.
So how do we swim with the current when that current is pulling us down? The strategy is the exact opposite of what we do in an uptrend. First, you identify that repeating pattern, lower highs and lower lows. Then, you look for your chance to sell or short the crypto during those weak bounces, right at the lower highs, because you're expecting that next big drop.
Okay, let's just pause for a second and look at these side by side, because this is really the heart of trend analysis. On the left, you've got the uptrend, that clean staircase going up, higher highs and higher lows. Your strategy? Buy the dips. Simple. On the right, the downtrend, a tumbling series of lower highs and lower lows. Your strategy? Sell the bounces. I'm telling you, if you can really get what's on this one slide, you're building a massive foundation for your trade.
Okay, so you know how to spot an uptrend, you know how to spot a downtrend. Great. But trends don't last forever. So what happens when that staircase breaks? What does it mean when the pattern you've been following just snaps? Learning to spot this is honestly one of the most critical skills you can have as a trader.
All right, let's play out a little scenario. Imagine you're watching a perfect uptrend. I mean, it's beautiful. The price is just making higher highs, higher lows, climbing perfectly. Then, boom, the price drops hard, and this time it falls below the previous higher low. The pattern is officially broken. What is the market trying to tell you right at that moment?
That right there, that is a massive warning sign. When the price breaks below that last higher low, that is the market's first clear signal that the uptrend is in serious trouble. It might just be weakening, or it could be reversing into a full-blown downtrend. It's like the market is screaming, "Hey, the staircase is cracked, be careful." This is absolutely not the time you want to be buying the dip. This is the time to hit pause and pay very, very close attention.
If you need a daily analysis of the market and useful tips about crypto trading, subscribe to Trade Compass and hit the bell. See you in the next part.